Good morning, audio morning brief for the U.S. stock market. It is July 29th, 8:42 a.m. Eastern Time. Rich pause for critical point. The model is assuming until the stock market takes out last week's low for the major indexes, there's a possibility this market's rallying into September. It's going higher. This also suggests a chance the Federal Reserve will keep people happy. They may not lower interest rates, but they may make people a bit happy here and continue to dial in the possibility of lowering interest rates in mid-September. Now, there are things that can go wrong with this call, because this level 2 is later than it should be, but the model is learning that over the past 2 or 3 years, these patterns have been taking a little bit longer, not enough to change the rules or change the model. We're concerned if we change it, it's just opening the door to be wrong somewhere else, and we like the way it's performed for many, many decades and back testing for 100 years, and I like what it's doing for my pocketbook and making money and managing risk. So we're leaving it alone. But we're also trying to do the best we can to keep up with the market. And the model was saying, you know something, we did pretty good calling that recent top. We were pretty close to it, and it was a tricky one. It was a late one to deal with and work with. And now we really need to consider the same thing is occurring. It's bottoming later than it should be, okay? So there's that scenario higher into September. However, we may yet learn the market has to go lower for early August and then higher. We may yet learn it goes higher and changes its mind and is lower by late August. It may even be lower into September. But we're starting to come up with the conclusion that it's unlikely to be much lower by September, that we're kind of getting the worst out of the way in these very brief sell-offs to try to correct the market, rebalance the market. And if you look at my weekly chart on the weekly update on Thursday, you'll see the fair valuation. The market came right to that fair valuation and bounced up from it. Now, I didn't give that information out for free, and that was a revise. So you, the subscribers, are the only one that knows of it. So we know there was something else there, another way of people calculating that told them stop selling and started buying. Here's the dilemma. We may be heading higher into September, but we know there's many different alternate scenarios of saying we're going to be wrong and maybe all the way into September, okay? What we can have is on a short-term basis, this may be nothing more than buying for preparation of the Federal Reserve concluding their meeting on Wednesday. And if they ever come in and lowered interest rates, this market ought to go up like a rocket ship. So be prepared for that, ready to press that buy button. I think that's how I would approach it. I'm already bought in. I think people are trying to do the same thing. They're saying at least buy some, so we're prepared if the Federal Reserve is more pleasing to the marketplace. More than likely, the Federal Reserve will not lower rates, is the best forecast I can see from modeling and the people I follow. But they could give us a very nice clue that they're probably going to lower rates in mid-September, and that could cause some buying all the way into September. But more importantly, we still have the economy doing well, even though it's slowing down, and there are some risk that it could slow down more than we would like, and something could break. And for the moment, it's looking like it's positive. We also have high-tech earnings due now next week, from what I understand. If they're disappointing, there's probably going to be more selling, and we'll find out we were too bullish too soon, should have left it alone, shouldn't have changed our mind so quickly, okay? But there's a good chance many of those earnings are actually going to do fairly well. It might be all right in the longer run, too. We still see evidence that people are still buying all those other stocks. The equal weighted indexes still look strong and firm. And yes, they've been selling NVIDIA Magnificent 7, but the model's warning it might be time where they'll say, you know something, I sold enough of those, I'm not selling anymore. And I got new money coming in to buy even more of those other stocks, but I think I'll actually put some money in and buy some of the NVIDIA and Mag 7. So we could get everything on the same page, and then these major indexes are going to move up better than what they have been. They're going to recover. So I'm going with that scenario. Now, for those of you interested in a very short-term basis, we've got level 3 scenarios when the market may go higher in the next week, it may go lower in the next week. We're favoring higher. But there are issues here when the level 3 top can come in just about the time of the Federal Reserve or a little later and lead to actually lower prices next week. It can flip around us. But at the moment, we're going with a little bullish stance. But we'll reevaluate once we get to the Fed, of course. Everyone has to reevaluate getting to the Fed. By the way, the jobs report's coming out on Friday, and also PMI manufacturing coming out Friday. To me, jobs is more important than PMI and a lot of the other data. Earnings may or may not be important than anything else, but it looks like to me the Federal Reserve is the number one thing, top of the list, okay? All right, now, on the level fours, the model's saying, yeah, that's up overnight, but now you've created a little gap up that might mean they want to sell it a little later, and it turns out level 4 swings, pops and drops day to day, it ought to be down tomorrow. What we can't tell is it going to top out this morning, during the day, at the end of the day, and then down by tomorrow? So it may start down today into tomorrow, it may stay up all day today and then be down tomorrow. I'm not that concerned of it. I don't think they want to heavily sell ahead of the Federal Reserve. All right. If anything, I think they want to buy ahead of the Federal Reserve. The interest rates this morning are weak. It probably has topped for level 3, therefore level 3 bottom in bond prices. They're buying some bonds ahead of the Federal Reserve just in case the Federal Reserve did lower interest rates and created a shock and a surprise. They've already got some bought. They're already prepared for it. If the Fed doesn't do that, they may learn they still want to hang on that and buy even more because the Fed may give them a clue they're going to lower interest rates in September. And I think they feel comfortable enough that if the Federal Reserve doesn't do anything and people turn negative on it, they'll just sell back those bonds. And they're going to do the same thing in stocks. They're buying stocks for that preparation in case there's a bullish surprise. They're more worried about missing out of the bullish surprise than they are of the risk of a bearish surprise. They think they can control it and sell it and start over again at lower prices later. All right, don't have any fresh news here. We got to keep an eye on earnings from now into next week. We got to see the jobs report, but more importantly, we got to see what the Federal Reserve says at 2 p.m. and later on Wednesday of this week. For the moment, yeah, I can see it dipping a little tomorrow for the stock market, but frankly, I think they want to try to be sideways to higher into that Federal Reserve. Then we'll take a look, is it going to stay higher a little while after it, then down? Or it does that, but the downside doesn't matter because we're in a larger trend that's actually up now into September. And I'll do more explaining on some of this longer-term fluctuation a little later in the week. I think that minor long-term is just not going to work. We should not make a big deal of it, but I will try to call the tops and bottoms now into next year, just in case you want to do something with it. But I think we just pay attention to level 1 tops and bottoms that are going to occur every year, during every year, standard operating procedure, with some of those might having an extra kick due to this minor long-term stuff. When it comes to long-term, I think we ignore the minor long-term, zoom out and be bullish into 2026, bullish into 2028 to 2031, realizing lots of hiccups and bumps in the roads along the way. And we can see more of those now into early next year. But I'm a little suspicious this market wants to go higher into September, maybe even higher in November, even though it could give us some sizable bumps in the road. And last week we made the call because we felt like we've got one of those bumps in the road, and that's all it is. When any luck at all, it has bottomed and going to be at least stable to higher for a little while here. Explain more tomorrow. Past results not necessarily indicative of future results. Have a great day. Thank you.